the view at KKR is very similar to what Ben articulated, which is, there's dynamics in healthcare that are counter-cyclical. We actually went back and did some work and looked at how healthcare spending had trended during past recessions, and it actually seems to demonstrate counter-cyclical reaction, where I think real spending growth in healthcare has been about 5.5% over the last 3 recessions. So that's kind of the good news given where we sit right now in the cycle. I think the bad news has been, I think, articulated very well. Healthcare has its own cycle driven by different dynamics. And I think, unfortunately, just as we're coming out of what looks like a pretty tough economic cycle right now, we're probably heading into the storm of what, at least from my perspective, is going to be a pretty tough reimbursement cycle. And I know there's a lot of reasons why people think it may be more muted than it was last time around in BBA, but that you look at the force of the arithmetic and kind of lack of political will aside, it becomes challenging to draw that conclusion. So I would say we look at the current environment with some trepidation. It's the tension that Ben talked about is exactly the one that we wrestle with almost every transaction, which is great volume dynamics driven by all the stuff everyone talks about on one hand, very challenging pricing and margin dynamics driven by just the fiscal realities we face as a country. And I don't think that's just going to impact the people who are directly receiving their payments from the government, or people who are downstream from those providers, whether they're pharmaceutical companies, product manufacturers, who are going to feel pain as well. Michael, directly to your question, how do you react to that in terms of investments? I think there's still investments to make. Chris Gordon from Bain talked about the investment that they had made in the CRO space. There are companies that look like they'll be beneficiaries of these challenges that we're describing. Not every company is going to be hurt. And then the concept of distressed investing. Before I joined KKR, I spent 8 years at Goldman Sachs, and the last time there was a cycle similar to the one that at least I would anticipate is coming. Goldman Sachs made a lot of money buying nursing home bonds when the whole industry was effectively bankrupt. And there'll be opportunities like that again. And there's a lot of danger in that type of investing, because if you're wrong, you look really dumb. But there'll certainly be some interesting opportunities. So we're spending a lot of time right now, given the challenges and just trying to execute large transactions, trying to sort through how might these trends play out, who might the losers and winners be, where we want to lay down our bets, and over what time frame. But it's a very dynamic process in thinking through that.